Forex terminology. So when all the first forex terminology I want you to talk about, first, what is terminology? When you talk about terminology, you are talking about terms that forex trader use that is best understood or understood by fellow forex traders. Does that make sense? The terms forex trader use that is best understood by fellow forex traders. Those are the terms in forex, all right, or you call it jargons, all right. So one of those terms in business and forex is called buy and sell. Another term is long and short. Another term is bullish and bearish. Another term is swap, fee, spread, commission, leverage. Leverage, L-E-V-A-R-A-G. Leverage, pips, lot size. So let me quickly run through this if I can finish, and then we're done with this section. And then the next section is going to be a proper explanation of lot size and pips. Proper explanation of it. So I'm just going to give a brief explanation from this video. We have stop loss, take profit. So let's start with buy and sell. Buy and sell is a word that everybody knows. So whether you do forex or not, you know what buy and sell is. All right. But first, what you need to know about buying and selling is that in forex, for those of you that have traded crypto before, in forex you can make money by buying the market or by selling the market. This is how it works. So in forex, if the market is here, let's say this is 30 naira, let's say market day for 30 naira. If the market is here and you know, say this market from here now up to the next year when they go, what you do to that kind of market, the investment you do is to buy the market. All right. So by the time you buy from here and it is going up, it means that the more it's going up, the more money you'll be making. Right? The more the market is going up, the more money you will be making. Simple. So if it is going up and it goes, something you bought from 30 naira, it now goes to 100 naira. It means that you have made 70. But if you buy this market, instead of to go up the way you expect, the market is not coming down. Like when you go to 20, 15, 10 naira, then you'll be losing money. That's how it works. So basically, that is it for buy position. Now, when you are intending to sell in forex, selling is that the market is here, 30 naira. You are expecting it to drop. The price of the market, you are expecting it to drop. What you do so that you can make money in forex is to sell that market. When you enter a sell in the forex market and the market is going down, you'll be making money. And this is where majority of people get it wrong. They now call it gamble. So which one we say you go choose between buy and sell? I mean up and down. So the market will go down. When you sell, you're going to make money, the market will go up. Because the question most people can't answer is when you are now asking them. So for you to tell me if the market is buy is quite understandable. Anything buy, you can understand that if you buy anything and the price comes the cost, you can't sell them. You can make money from that thing. But what do you mean by when you sell and the market is going down? The more the market is going down, the more money you make. That thing confuses a lot of people, and some people can't even explain it. Because the question is, you just open your forex account, you deposit money, then you are now saying, because you find out that GBP USD chart is about to go down, if you sell GBP USD, you'll be making money when it is going down. So the question is, what do you sell? Because you just open your account, you never even buy anything before. Not what person buy, 9 persons are do they sell. That's the question majority of people ask, and some people can't answer it. It is simple. It is simple. First, let me explain it in this form. So now let's leave buy out of this. Sell is what we are trying to struggle around now. Now let's use the layman explanation to get this. What's the best explanation I can give to this now? Now let's say the price of one orange is 13 naira. Let's say the price of one orange is 13 naira right now, and you find out that the price of orange is about to reduce in price. How do you now make profit when by selling? It's simple. The one orange, all right, that you have, you are going to sell it off. Now, when you sell that one orange off, and the price is going down, and it goes down to 10 naira, it simply means that you sold one orange at 30 naira. Now that the price has gone to 10 naira, that 30 naira you sold orange for is still in your pocket. So now you can take that 30 naira back to the market and it will acquire you 3 oranges. Does that make sense? That's the layman explanation that I can give for this. Alright, as we go further, I will explain how it works in pairs. If I'm trying to do that now, it might just crack your head. Because in pairs, what you are basically doing is that if you are selling the market, you are actually buying one of the coins against the other one. Then if you are buying, I don't want to explain that, it will probably confuse you, but as we go further, when you are a bit advanced in these terms, all right, we'll go deeper in that. But let's just use this to explain ourselves. That's all. All right. So now, but just understand that in market, when you are expecting price to go up, what you do is to buy. When you are expecting price to go down, what you do is to sell. And when you buy, the more it is going up, the more you'll be making money. When you sell, the more it is going down, the more you'll be making money. Again, it means that if I buy market from here and the market is going down instead of going up, that means that market is going against me. So the more it is going down, the more I'll be losing money because my direction was up. Now, if it is going down, it's going against my direction. So the more it is going down, the more I'll be losing money. That is why when you buy from here 30 naira, expecting it to go up to 100, you have to set your stop loss. Okay, once you reach 15 naira, more broker, help me sell this thing away before it will go drop, go 2 naira. Where my money will take vanish. That is the beauty about Forex. Forex allows you to set stop loss and allow you to set take profit. The most important is stop loss. The stop loss is what is going to protect you from losing all your money in an investment. Same thing happens to sell. So if market is here, 30 naira, and I'm selling it, it means I'm expecting it to keep going down. But if the market refuses to go down, it's now going up. That means it's going against me. So in this case, unlike the other one, the stop loss was downside a bit. In this one now, since I'm selling, I have to put my stop loss here. So this thing I sell, once the price when they go up to like 45 naira, more now close my trade in loss because by price going up in a sell trade, it means I'll be losing money. I want it to go down, that's what I'm selling. So all this buy and sell thing will not make sense to you until we enter chart with a buy, with a sell, with a transact. Once you start putting this in practice, like trading it, it will start making sense to you what I mean by long and short and all of that stuff. So, but that is it for buy and sell. And the next terminology here is just relating to this one. So you have long and short. Long and short is another word to replace buy and sell professionally in Forex. So instead of a Forex trader to say buy GBP USD, it's going to say long GBP USD. Another short word, another short form of GBP USD is called GU. What did we do? We pick the first letter of this one, Great British pounds, and we pick the first letter of United States dollars and we put it together. When I say buy GU, I'm simply telling you to buy GBP USD. When I say buy UJ, I'm telling you to buy what? USD JPY. Is that okay? Buy EUR USD. Can you see that? So just take note of that again as we move further. So long and short is another word for buy and sell. When I say long GBP USD, I'm saying buy GBP USD. When I say short the GBP USD, I am saying sell GBP USD. So the professional language for Forex trader to say buy and sell is what? Long and short. Now, Over to the third one, bullish and bearish. The word bullish and bearish is a term that we use to describe a market that is going upward rapidly or a market that is going downward rapidly. So if you have markets surging upward like this, I'll say, hey Joseph, the market is bullish. Or I say, hey Joseph, GBP USD is bullish. So I will advise to go and long it. That is me saying GBP USD market, the rush go up, oh, and that's maybe go buy and more. But professionally speaking, GBP market is bullish. I will advise you go and long it. Likewise, for bearish, if GBP market is dropping like this rapidly, I say, hey Joseph, GBP market is bearish. I will advise you go and short it. That's another way for me to say, instead of me to say, Omo, if you see that GBP market now, they crash, they go down, I will advise you to go sell Amo. That's bullish and bearish. Now let's talk about swap fee. Remember, I said as we go forward, I will say these things. Remember, from the broker, I said the broker is the middle person between you and the first market. That means the broker is an errand boy that is sending you, that you are sending errand. Say, Alpha, go buy GBP USD for me. Go buy USD for me for market. Help me sell and when you reach so price. Help me sell and when you reach so price. Help me close and help me show. You are sending this guy on an errand and you need to pay him for his service. So that's where swap fee, spread, and commission comes in. These three terms here is where broker makes their money from. Broker make money from spread, broker make money from commission, broker make money from swap fee. So let's kill the three at once. So spread, and let me start with commission. Commission is simple. I saw, I will see, now you go chop. I saw, I will see, now you go chop. So commission is a fee you are charged for every trade you execute with your broker. For every order you execute per trade with your broker, a commission is charged. So when you click the button long or buy in your MT4, buy EUR USD, when you click that button, instantly a commission is charged. Say $0.2, 0.2 cents. Depending on the volume, the lot size, depending on the lot size you are trading with, that's how they are going to charge you. They are going to charge you based on the lot size you are trading with. All right? They are going to be charging you based on the lot size you are trading with. We have not discussed lot size. Let's leave that. So now, if you buy GBP USD or USD or you sell USD, JPY, whatever transaction you enter at all, they are going to be charging you a particular fee. That fee they charge you per transaction for the fact that you send us message. This fee they are charging you is called commission. That's it. Now let's talk about swap fee. The swap fee, now you don't tell brokers say they help you buy GBP USD or EUR USD. Now they don't buy them. Remember I said now they go still help you keep what you buy. Now the broker will still help you keep what you buy. They'll keep them for their save. They'll keep that money for their savings, their vault. Vault, you know what a vault is, where you save money. All right. Now when they don't help you keep that money, if the trade you executed with your broker is left running for 24 hours or for more than 24 hours, as soon as that trade completes 24 hours, the broker is going to charge you a fee called swap fee. It's more like security man fee. All right, if you park your motor for a filling station, you cut off the security guy to look at that motor. Every day you're going to charge you 500 naira. That's something with the broker. So if you place a trade with the broker and you leave that trade to run from now to tomorrow, by this time tomorrow the broker is going to charge you swap fee because that trade has automatically completed 24 hours. All right? That trade has automatically completed 24 hours. So swap fee is a fee you are charged when a trade is left running for more than 24 hours. That means tomorrow they'll charge you that fee, let's say 0.1 cent, and they will charge per day. If you leave until next tomorrow, they'll charge you another 0.1 cent. That's 0.2 in total. 3 days time, 0.1 cent. That's 0.3 in total. If you leave around for 1 week, that's 0.7 in total. So all these fees are little things that the broker gather before they charge you, me, and every other trader. They don't make block. All right. So now let's talk about the spread. The spread is simply the differences between the buying price and the selling price of the broker. What does that mean? The spread is the differences between buying price and selling price. The spread is the difference between the buying price and the selling price of the broker. The best way to explain this to you is this. When you say the buying price and the selling price of the broker, you are simply talking about if I want to buy from this broker, if I go to this broker and I say, I want to buy so currency pair. I want to buy so currency pair. How much are they willing to buy, to sell that thing I want to buy to me? At that instant time, if I want to sell that same currency that I bought from them, how much are they willing to buy it back from me? Now let's take it back to Aboki. If you walk out to Aboki shop now, as me and you dey talk, you tell and say, I want change dollar. Now only $1 I get. One guy won't give me. I want change. I might take go buy yam. 1 2 bar. I might take chop. That's if you very rich, right? You can't carry $1 go meet Aboki. As you carry $1 go meet Aboki, Aboki will tell you say you are the one selling now. You are selling your dollar in exchange for naira. So that means you are the seller of the dollar. Aboki is the buyer of that dollar, right? So the Aboki man will tell you say, I will buy this dollar from you at the rate of 1,500 naira for this $1 when you bring come. As you can't change that feeling, you give me 1.5. The Aboki man gave you 1.5 and you are leaving. Alright? As you are leaving the store, you find out that your uncle just sent 10 tuber of yam to the house. What does this simply mean? Simply means that you don't need this money for yam anymore. So you want to go and give back your dollar, your naira, and receive your dollar back. If you go back to that same shop with your 1,500 naira, you can't tell the Aboki man, say, Alpha guy, I need my dollar back. The Aboki man will tell you that now this don't change now. You are now the buyer of dollar, the Aboki man is now the seller. Before you were the seller of dollar, the Aboki man was the buyer of dollar. Now you are now the person that wants to buy the dollar back. Aboki man will tell you, say, for me to sell this dollar back to you, guy, I want 6. So you go gas add 100 naira join your 1.5 to pay the Aboki 1.6 to get back that dollar. So that means the buying price of the Aboki is 1.5 and the selling price of the Aboki is 1.6. So the price is the difference between his buying price and selling price. Does that make sense? So it simply means that the spread of the Aboki man is what? 100 naira. So now then for the cash out. Now the profit they make with that. Whenever you are buying from an Aboki and whenever another person comes to sell to Aboki, the price that they sell give you the buy and the price that they buy give you the sell. Different. That difference is what in forex is called spread. The same thing your broker does. If you want to buy from the broker and if you want to sell to your broker, the price they interact with you in these two orders are different. Let me not say more than that. That's the best explanation ever I can give. Now let's move over to, so we have killed the theory, swap fee spread and commission. If you have more questions, you can comment on the video below, or you come to my DM as my student, or you come to the group. Mainly, I will attend to more of the group than my DM, because my DM I have up to like messages running to 500, and I might not see yours. All right. Now let's talk about leverage. When we talk about leverage, I'm pretty much going to talk about leverage, pips, lot size, stop loss, and take profits. But let's talk about leverage real quick. Now, what is leverage? Leverage means borrow. Leverage means borrow. Leverage means borrow. Leverage means what? Borrow. And how does the word leverage came into existence? Before now, not everybody was able to access the forex market. Not everybody was able to trade the forex market. Why? One of the reasons is because the minimum amount of equity you need to trade the forex market used to be $1,000. I will explain. So the minimum amount you need to trade the forex market used to be $1,000. So if you don't get 1K dollars, you don't trade forex. So the broker thought to themselves, since there are other people that have $900, some people get $977, some people get $990, but they can't trade the forex market until you have 1,000. Some people have $100. The broker now be like, okay, how do we bring these people in to the forex market? They now introduce what we call leverage. Now the leverage is in this form. The best explanation I usually give my students is this. Leverage is more like, say there is a club. For you to enter that club, go part 2. You need to hold 1 million naira for pocket or to show the bouncers before they give you access. 1M. Now you will get 500K. So there's a broker outside the club where they borrow people money. The broker will give you 1.5 million. Maybe I join your 500K, your money will call be 2 million. So if you use it, you show the bouncer. The bouncer will call you a dobu. They will allow you enter. But the instruction will say once you enter the club, one of the broker monitoring spirit they monitor you. The moment you feel buy drinks worth 2 million, they will hype you. Hey, dobu. But the moment you drink from that table, feel you drink. The moment you drink drinks of 500K, and you don't drink 500K among all the 10 bottles of Hennessy where you buy, as you don't drink 500K worth from those 10 bottles, the broker will come and pack the remaining bottles because they don't want me to spend more than those bottles or maybe you drink more than those bottles because the remaining bottles is from their money. They will give you their money so that you can use it to cover up and increase your fees. Alright? So that is basically what leverage does. So in broker, this is how it works. In reform, this is how it works. When you are creating your MetaTrader 4 account inside your broker, like we explained before, there's a part that I told you are going to be filling some form. There's a part that will ask you to choose your leverage. Leverage they start from 1:1, 1:2, 1:10, we have 1:5 too. I'm just jumping. 1:50, 1:100, 1:200, 1:500. We even have 1:2000, and we even have 1 unlimited. That you can borrow any amount in the world because the broker has any amount you want. That's unlimited, no limit. So now, let me just explain what this 1 means. Now, if you choose 1:1, it means that you don't need any money because ratio in mathematics kind of symbolize multiply. So if you choose 1:1, it means you don't need any money because 1:1 means my money multiply by 1. So if you have $500 and you approach your broker and created an account with 1:1, they are going to be giving you times 1, which is equal to $500. But when you choose 1:2 and deposited $500 to your account is now going to be powerful as $1,000 because they are going to multiply your 1, which is $500, by 2. 1:2 means multiply by money that I deposited by 2 times. That's how it works. Now, let's work with real numbers now. So let's say when you are creating your account, you use 1:100 or 1:200. Alright? If you use 1:100 or 1:200, let's make a calculator. Let me not crack my brain too much. 1:200. Alright, let's say the account you created with your broker is 1:200 that you choose because they give you the option to choose anyone you wish. So 1:200. Now watch, if you deposit $100 to that account, the broker will multiply your $100 by 200. That's the amount they are going to borrow you, which is $20,000. So that means your account balance is still going to be showing $100. But behind the scene, that's from the broker end, what did they see for your account at $20K? Because they need to show it to you. Now they won't carry your money to go buy for market. So you need to really see them. Now your balance you need to just see. So That's why most people don't know what leverage is, because the balance don't change when you choose leverage. The balance will remain the same on your MT4, but in their own side, your balance will be showing $20,000. They are borrowing you this money. They don't need to show it to you because you don't have reasons for it. And then one is that they buy for you. The only time when you tell me say they don't really borrow you this money, they say your $100 account will now be able to transact a transaction of $5,000, $10,000. And you understand that later on in this class. Okay, and we're going to prove that to you also when we're doing practical, that this leverage really means borrow. I'm going to prove it to you. I don't like saying things without proving them. All right? So now it means that your account is now valued at $20,000. Your $100 account is now valued at $20,000. If you choose the 1:200, that means waiting a $20,000 account will do, your account will do one. So the way it works is that with this $20,000, you can enter a trade worth $20,000 transaction in Forex. But when you enter that trade of $20,000, your losses will start counting from 1, 2, 3, 4, 5, 10, $20, $50. The moment your total loss is amounting to your overall money, the money you originally have, immediately you have $100 loss, the broker is going to shut down your account so that they can walk away with their $90,900 that they borrow you. That's how leverage works. I don't want to go deep into this until I'm doing the practical aspect of leverage. So you see it. We're going to create an account with 1:1, a $100 account with 1:1. I will create another account, $100 with 1:200. And we're going to try to place a trade. That's when you find out that what I said is true. What did I say? I said, in Forex, if you don't have up to $1,000, you don't trade. So how you take no saying and truth I talk? We say, create an account with 1:1. Create another account with 1:200. Both of the accounts may be $100 accounts. That means both of them are not above $1,000. Try to place a trade with this one. They'll tell you not enough money. And this one is $100 account. This one, the same $100 account. Try to place a trade, it will work. So the question is why? Because behind the scene, this account has been multiplied by 200. Behind the scene, this account was multiplied by 1. So it's still $100. That means $100 cannot really trade the forex market. You need more than $1,000. We'll talk about that when we're talking about lot size. So that is it for leverage. Now, what is pips? What is pips? We have just 3 things left, a bit 4. What is pips? Pips is the measurement of distance in Forex. Now, if a car moves from point A to point B, in physics, we say if A is 20 and B is 140, the car has accelerated from here to here, from 20 to 120. The car has accelerated by 120 kilometers. Because from 20 to 140 is 120 extra. Same thing in Forex. If the market moves from one point to another, move from 10 to 80. Instead of it to say kilometer, the unit of measurement of distance, in Forex, the unit of measurement of distance is pips. So you will now say the market, or let's say pounds, GBP, USD, the GBP USD market has moved by 70 pips to the upside. Also, you can have downside movement. Market will start from here now, 100. You go drop, go 50. You say this is EUR USD, for instance. You say the market has dropped by 50 pips. So pips is a unit of measurement in Forex. You don't say 50 meter, 50 centimeter, 50 inches, 50 whatever. The unit of measurement of distance when market move from one point to another, the unit of measurement is in what? Pips. So what is lot size? I asked this question when I was being hosted live with Vicky FX. I said, what is lot size? What is lot size? The word lot size is termed value or measurement. All right. So lot size is what we use in forex. Lot size is what we use in forex to determine the quantity of an asset that we want to buy. I will explain. So if you want to trade GBP, sorry, say now only GBP I just use as an example. If you want to trade GBP USD right now, you can't just tell the broker, I want to buy GBP USD. You also have to tell the broker how many GBP USD you want to buy. What is the quantity of pounds, dollars you want? That's where lot size comes in. So it is the lot size that is used to determine the quantity of an asset you want to buy. All right. So in forex, this is how lot size works. Lot size starts from micro numbers 0.01. Then you have 0.02. You have 0.03. You have 0.04. You have 0.05. All the way to 0.09. Then after 0.09, you know you have to approximate. Now you have 0.1, 0.2, 0.3, or you can put 0.30 or whatever. But the 0 does not really matter after the decimal, right? So 0.4, 0.9. I don't jump. Let me say you know get 0.5 and 0.6. So after 0.9, you now have approximately 1.0 or 1. You can say 1 or 1.0. You have 2.0, 3.0, all to infinity. So between this number and 0.9, we call it micro lot. Then between 0.1 and 0.9, we all call it mini lot size. And between 1.0 and infinity, 1, 2, 3, 4, 5, 6, 7, 8, 9, 100 lot size, 200 lot size, 500 lot size. All this one, they are what? Standard. Standard lot size. Is that okay? So how does it work? And why did I say the minimum amount of money you can trade the forex market with is $1,000? It is because the minimum available lot size in forex trading, I'm not talking about synthetic indices. The minimum amount of lot size in forex trading is 0.01. And 0.01 stands for micro. 10 raised to power what? Minus 3. 10 for minus 3 is showing that it's 1000, which is $1,000. So whenever you are trading forex and you want to buy GBP USD on your MetaTrader 4 app, you have to type on that place the lot size you want to use. You have to type there the lot size you want to use. Is that okay? So if you say buy, if you put on your MT4 buy GBP USD, buy 0.01 GBP USD. That's how the instruction goes. Buy 0.01 GBP USD. It simply means that you want to buy 1,000 units of GU. Remember, I already told you the meaning of GU, short form. Buy 1,000 units of GU, or $1 worth of GU in 1,000 places. $1 worth of GU in 1,000 places. Remember, dollar is a universal currency that is used to compare and measure every other currency. So the minimum amount you can buy in forex per transaction is 0.01, which is what? $1,000. And now, why was lot size introduced? I will explain this to you. Not every mentor explain this. Why was lot size introduced in forex? Remember in crypto, if you want to buy any coin now, you want to buy, let's say, you want to buy Sol USDT. If it is in crypto, you want to buy this coin. What you just do is say, I want to buy 2,000. You put the number $2,000 of Sol, $2,000 worth of Sol. If you want to buy $2 million, you say, I want to buy $2 million worth of Sol. You see? But the problem is, in forex is a $1 trillion market. So whether you know they get that kind of money or not, there are people where they put in transaction of billions. Billions. You know how many numbers with that? And see, I want to buy 20 billion. I want to buy $20 billion worth of GBP USD. So imagine the stress it would take for that person to type 20,000,000,000,000,000. Sometimes you can make a mistake and add another 0. you add another zero, that's 200 billion that you just bought by mistake. So what they now did was that the only way to compress numbers so that it will be easy for us to interact is to introduce what we call lot size. So what they are saying is that in lot size, let 0.01 represent $1,000. So person won't buy $1,000 instead of to type 1000, maybe just type 0.01 there. We will know say now $1,000 in one buy. This is what the broker built. So if you want to tell us say now 1K, instead of you to type 1K for that your instruction, just type 0.01 there. They are not doing this majorly because people where they trade 1K. 1K no dey easy to make mistake. It dey very rare to make mistake with 1K. Now people where they do bigger transaction. So what does this mean mathematically? If 0.01 represents $1,000 in forex, 0.02 is what? $2,000. This is what? This is what? You said 5,000. This is what? $9,000. 0.09 represents $9,000. If you are mathematically sound, what is 0.1? Approximately $10,000. You will see them now. So instead of you to come and say, I want to buy 10,000, got to type 10, 0, just type 0.1. Which one is faster? 0.1 is faster. So over, let's jump. Here now is what? 90. All right. So let's just jump to this one. Let's give all this 0.2. That means this is $20,000, $30,000, $40,000. This is $90,000. All right. Then after $90,000, you have 100K. That means 1.0 represents $100,000. So instead of you to say buy 100,000, don't type 1.0. Which one is faster? This is faster. That's why they introduce lot size. What does this mean, guys, in essence again? Going higher. Instead of you to say, I want to buy $1 million worth of pounds. All right? One. I don't even know how to write $1 million again. Okay. Just type 10.0. They will already understand that 10.0 means $1 million. $10 million. 100.0. Or 100 lot size. You need to type 0.0. Just put 100 lot size. That is why lot size was what? Introduced. That means lot size is what you used to tell the broker. Lot size, let me be slow for the slow learner. Lot size, now waiting they tell broker say, now this amount I won't buy. So if you put for your MT4, if you type 0.01 for your MT4, you dey try tell broker say, I want invest $1,000, and the lowest lot size na 0.01. Now why I tell you say for forex the lowest money if you invest na $1K, but you dey see people dey trade with $100. How is it possible now? From what I've explained in the past, the only reason why you are able to trade with $100 is because broker will not give you what we call leverage. That leverage will come multiply your money will come look big. Leverage be like fake life. I'm trying to teach the slow learner slowly. Please, I don't like slow learner. If you're a slow learner, leave my class. That's what's up. That's what's up. So now that's it for lot size. We'll dig deep into lot size when we'll be talking about the calculation between lot size and pips. How you go to know how much you go make. If market day for 0, if market day for let's say 10, it come go 30. So that is 20 pips. Abi? It has increased by 20 pips. Now, how much will you make if market move from 10 to 30, which is 20 pips? How much will 20 pips fetch you in forex? I'll give you an expo. Later we'll talk about it. If market moves by 20 pips and you are trading forex, if you do same as 0.01 lot size, you take trade that market when move from 10 to 30 pips, you are going to make $2. But if you do say now 0.1, now you take trade this same market, you go make $20. If you still do say now 1.0, you still take trade this same market when move by 20 pips, you go make $200. Sure, you see the difference. That's the summary of what I will teach you later. So you see the difference. It means that the higher your lot size, the higher the money you will make per pips. The same 20 pips market, Mr. A trade down with $1,000, Mr. B trade down with $10,000, Mr. C trade down with $100,000. So Mr. A will make $2, Mr. B will make $20, Mr. C will make $200 because they invested different amount of money. It's simple. How much you invest, then they determine how much you will make if market, if fuel increase by price or whatever you are buying. So that is it for lot size. So let's wrap this class up by talking about the take profit and stop loss. I will not really spend much time because I've already explained it linearly before. Take profit and stop loss is an order, O-R-D-E-R-O. TP and SL is an order that you use to protect your trade, especially the stop loss. So like I said, if this is the market price, say you are buying any currency now and the currency values, assuming, we are just assuming these values, assuming the currency is selling for 16 naira. So and you buy from here. If you buy, what is your expectation? You're expecting market to keep pressing upward with candles. So let's say your expectation is that the market is going to press up to 180. So you are going to set a TP at 180. Why are you setting a TP at 180? You might be sleeping and snoring and the price will reach 180 and you are still in your dream, you know, being chased by your village people. So at 180, if you set a TP is an automated order. It's an instruction given to your broker that when the price gets to 180, please help me to close this trade regardless of what I'm doing. So whether you are sleeping, you travel, you are, whatever is wrong with you, when the price gets to 180, the trade will automatically be closed. That means what you bought will automatically be sold back into the market and the money will be resting in your balance account. Again, stop loss, on the other hand, is used to protect your capital. Say, okay, there are chances because nothing is certain in life. So trading itself is not giving you a certain direction. So there are certain points where you buy and the market, instead of going up, it will go up a little bit and start coming down. And if it is coming down, the more you go down, the more you go to lose money. So you want to set a stop loss at what you can bear. So you will not put your stop loss at $40, 40 naira. So once this thing I buy at 60 naira per one, once the thing that they drop, go for 40 naira per one, help me sell them off, stop loss. SL, help me sell them off at 40 naira. I might not say per one of that goods or per one of that property or per one of that asset, I will be losing 20 naira. So if you do say 100 pieces you buy, which is 600 naira for 100 pieces, I be 10. Sorry, 6,000 naira. Now you take buy 100 pieces. If the thing drop to 40, that means your 100 pieces will now be selling for 4,000 naira. So you lose 2,000 naira for your 6,000 naira investment. Right? Yes, you lose 2,000 naira. But if you not sell stop loss, if you come and say, sorry, if you not sell stop loss, if you come and say this thing go 2 naira, that means your money will remain how much safe? 20 naira? Your mind will be. So you have to use stop loss most of the time. All of the time, almost all of the time, please. So that is the concept of stop loss and take profit. Like I said, we don't need to spend much time here because whatever I'm explaining here now, the only time you will understand it in details is when we are doing it practically. So I will head over to my phone and do a video recording on my screen while I'm explaining all these things and you are seeing them live and direct and I'm putting in live examples. So that brings us to the end of Forex terminology. Yes, there are certain terminology that I didn't discuss here that I have not said so far that you will hear from me later on. And as you're hearing them from me, I will be teaching what they are. All right? But these are the major Forex terminology for this basic class. As we move further, some terminology are going to be coming up and I'll be telling you what they are. Or if you hear me say something that is jargon to your ear, you can simply ask me to explain it for you and I will gladly do. So I'll be signing off from here based on today's class. Thank you.